Hello, accounting world and entrepreneurs out there all over the United States. This is Joe DeChara, CPA, coming to you live from downtown Metro Manila. That's right, I am a U.S. CPA living in the Philippines for a number of reasons. Number one, I have an amazing team of Philippine accountants because guess what? I could not find good accountants willing to work for a reasonable fee in the United States. So, so let me just tell you my really short-term experience. I just did this whole slideshow. And I forgot to hit the live button. So I'm doing this for the second time and I need a drink of water. So if you don't know me, I am a CPA. I have over 40 years of experience in the accounting business. Okay. I was born and raised in New York State. I got my CPA certificate in 1987. So that's a while ago. And I started in accounting before there were computers. Think about that. We did one of my first positions. Hello, Marianne, once again. Thank you for supporting me. One of my first positions was with a tax attorney, and he did over 1,000 personal tax returns, all by hand, pencil and paper. I was a reviewer, so I would take. He would give us. There was a staff of 5 reviewers. We would take his penciled in time, and he met with every single client. He met with them, and we would get his pencil copy of the tax return, check it. We would actually have to look at the instructions. We would check it for mathematical accuracy, but also what the actual laws were. It was a great way for me to learn tax laws. And then I went to work for a high level, mid-sized CPA firm where we did small businesses, mid-sized businesses, again, all with a lead pencil and a 13-column spreadsheet, not an Excel spreadsheet, okay, a regular paper spreadsheet. It was 13 columns because you had a column for each month, and the 13th column was to add everything up. And we had an adding machine with the tape. Fax machines were like, oh my God, we got to call the guy that we just sent the fax to make sure that they got the fax. Okay, we had something called beepers. So beepers, because there were no cell phones, they weren't even thought of yet. But a beeper, you could have beepers were like high technology too. You could get a beeper. So let's say your wife needed to get you and she didn't know where you are. Okay. She could send you a beep, and you would get it on the beeper and you would see who's calling you. Or if anybody needed to get you, they would send you a beep message, to your beeper, and then you can call them. So my point is, I started way back in the prehistoric accounting days. Okay, before we had all this technology, before we had all these bells and whistles, before QuickBooks was even a thought in somebody's head. Okay, and guess what? We did thousands of tax returns, thousands of financial reports. The financial reports were done on a typewriter. Okay. We did not have computers. And I sit here at my desk with a good amount of clients, a good amount of new clients coming to us every month. And we get to see other people's work, other accountants garbage, because that's what they're putting out there. I sit here today, a CPA in business over 40 years, and I could tell you that I am embarrassed. I am embarrassed about what the U.S. accounting industry is putting out there, because they're not helping their clients for the most part. Now, I can't put them all in a box and I say that they're all terrible. I'm sure there's still good accountants out there. I haven't met one in a long, long time. Okay. I do know one good accountant. Okay. Her name is Debbie, and I'm not going to tell you her last name. She's in California. She's one of my good friends' accountants. She's old school like me. Okay. She learned accounting when CPAs were called the trusted advisors. We're not called that anymore. We're not called that anymore. And I'll tell you what happened. Computers came on the scene. Okay. Accountants, instead of looking at computers for what they were, which was a tool, they looked at it as, how can we change the accounting process by using computers? And then one of the worst things that ever happened to the accounting community was QuickBooks was introduced. And accountants were shocked. Accountants were shocked. They thought QuickBooks was going to replace them. Not me. Not me, because I saw QuickBooks for what it was. It was just another tool. A terrible, terrible program. And Intuit perpetrated the biggest business lie ever. They told small business owners they could save time by doing their own bookkeeping. Big, big mistake. Big mistake. QuickBooks is not even a genuine accounting program. It's not even a bookkeeping program. It's a database that they tweaked to produce financial reports. There's accounts in QuickBooks that aren't accounting terminology: opening balance equity, undeposited funds. You'll never find those accounts in an accounting journal. They're not accounts. You can't close a period. Okay, you could go back and change transaction. Yeah, you actually, now you can close periods. You can make it, you could make it password protected. Okay, nobody does that. Nobody does that. There's no accounting controls. And what happened was accountants stopped doing accounting. They stopped doing accounting. You know, one of our lead accountants asked me one time, how come all these clients we get, their QuickBooks files don't match the tax returns? And I said, that's the problem, Luz. I said, that's the problem with the accounting industry. They're not doing accounting. Your books are supposed to match your tax return. It's clearly defined in the Internal Revenue Code that your books and records have to clearly reflect your income and expenses. So if you're using a QuickBooks file and the balance sheet, the ending balance sheet doesn't match the ending balance sheet on the tax return, there's a serious problem. There's a serious problem, but we get it all the time. All the time. In fact, we got a client a couple of years ago. The books were so bad. They were so bad that we wound up fixing the tax return and got her a $41,000 refund because the client screwed up her tax return. I mean, the accountant screwed up her tax return. They took her QuickBooks file, which, first of all, she's not an accountant or a bookkeeper, and her assistant was not an accountant or a bookkeeper. They were just entering transactions into QuickBooks. They didn't do any kind of bank recs. They didn't do any kind of credit card reconciliations. They had over 20 properties, over 20 mortgages. They had refinances. They didn't know how to book that stuff. But now this accounting firm, they weren't they were a pretty big accounting firm. They probably had at least 20 staff, 3 partners. And not only that, they were certified as forensic accountants. You can't just call yourself a forensic accountant. You got to be certified. What does a forensic accountant do? They reconstruct businesses' books when there's a dispute between partners or shareholders, when there's fraud involved, when there's some kind of insurance claim. They'll go into court and actually testify. So this firm, with all these partners, all this staff, put out garbage. They put out garbage. And I'm going to give you a couple of reasons why this happens. Okay? We're going to go through 5 different reasons tonight. And I'm going to be doing this 3 times a week because there's so many reasons. There's so many problems with the U.S. accounting industry that it's probably never ending. It's never ending. And my intention is to disrupt the accounting industry, right? Right, Yan Yan? That's what we're going to. Yan Yan's word for 2024 is disruption. And I'm with her. So let's see. Number 1, they overcharge. Accountants in the U.S. make their prices so high that most small businesses can't afford to hire them. Okay, why is that? We're going to go through a couple of reasons why they overcharge. First of all, there's not enough accountants out there. There's more and more businesses all the time. So the number of businesses are growing, and the amount of accounting firms and tax preparers are going down. So what's their solution? They say, we'll just charge more. That's how we'll make more money. That's a bad business model. That's a bad business model. They're selling their time for money. They're selling their time for money. If they knew how to run a business, they would create systems that would enable them to provide services at a lower rate. That's what we did at Bedrock. Okay. Our starting price for a brand new business is $57 a month. I want to see any CPA firm in the United States that's going to start a small business at that price. And that includes unlimited access to me, answering all their tax notices, making sure they're in compliance with state and federal laws. Okay? $57 a month, and they get an accounting team. They don't just get an accountant. They get an accounting specialist. The accounting specialist has people under them. The accounting specialist has somebody over them that's going to review their work. That's how you run a business. You don't overcharge people that can't afford you. This is March 25th. This is the height of tax season. If you're a business owner or just an individual, try calling your accountant right now. Try calling your accountant. They don't answer the phone. They're too busy. You know what? I'm a CPA. I've been doing this for a long time. How do I have time to do Facebook Lives like this? I'm always available for my clients. Always. They could text me right now. I'm not going to answer them right now because I'm doing this Facebook Live, but I'll answer them as soon as I'm off this call, this video. How could somebody be in business and not be available to their clients when they need them the most? This is one of the reasons why they don't have time. They allow their clients to dictate the rules. Okay, now I'm a CPA over 40 years. I've dealt with thousands and thousands of small businesses. and individuals. I think I know what I need and when I need it and how I need it. Accountants are notorious for just taking whatever garbage the clients give them. The clients don't know what they need. They're only guessing. I used to have a client, she used to give me like, oh my God, the stuff she gave me. And I was like, Ingrid, please just give me the tax documents. I don't need, your receipts from the pharmacy. I don't need this. Yeah. So some clients think that they're just going to give you all their receipts. Business owners think, oh, I'll just give them my QuickBooks file. No, I don't need your QuickBooks file. What I need is for you to follow my accounting system. So accountants will just let the clients create their own accounting system. They'll take the garbage that the client gives them and enter it into a tax return. That's not accounting. When I started 40 years ago, you'd think that tax attorney let the clients decide how he was going to do the tax return. You'd think that accounting firm where I learned how to do accounting, that they were going to let the clients decide how they were going to do accounting. That's what they do now. That's what these firms do now, and they're not helping their clients. And this is why they don't work hand in hand with the client to create a solid accounting system. And let me be clear, QuickBooks is not an accounting system. It's an accounting program. It's a tool. It's a tool. It's not a system. A system is where you analyze how the transactions are being conducted, who's conducting them, how are they consummated, how do we get the information, and who's inputting it. That's an accounting system. And then once those transactions are entered, are they being reconciled? Are they being verified against a statement? If there's a purchase of a piece of equipment, a car, is there a bill? If there's a loan or a mortgage, is there an amortization schedule? Clients will just enter car payments. What is this? Okay, we'll just put it to, the accountant says, we'll just put it to car expense. That's not accounting, but that's what they do. It's criminal. And last but not least, this is where I say they don't know how to run a business. They don't standardize their practices. I worked for a firm once. We had over 200 clients. That's a pretty good amount. That's a lot for a small CPA firm. We had there were 2 partners, maybe 5 staff. So we all had our client responsibilities. And let's say I had 50 clients I was in charge of. I had 50 different charts of accounts. 50 clients that had their own accounting system, their own procedures. It was insane. They would create accounts that made no sense. Outflows, reimbursed contractor expenses, things that you don't want to put on a tax return. That's not how you run a business. That's not how you run an accounting business. You need to standardize everything. You need to have a chart of accounts that works for most of your clients. Yeah, you can customize it for somebody in the real estate business. You could customize it for a database programmer. Okay, but there's a basic chart of accounts. Okay, it's not brain surgery, folks. But accountants let their clients create their own charts of accounts, and it leads to taking more time to service them. And that time equates to higher fees. Now, at Bedrock, we have all kinds of procedures. We have procedures for clients to upload their documents. We have procedures to let clients know what we expect them to give us during tax season. We send out emails. We meet with them, something that accountants forgot to do. They don't meet with their clients. And that's my rant for tonight. Let's just review. Number one, they overcharge. Number two, they don't pick up the phone during tax season, the most important time of the year. They allow their business clients to dictate the rules. They allow their business clients to create their own accounting systems. They don't help, number four, they don't help their clients create an accounting system. They don't explain it to them. They don't talk to them about, the importance of having a business bank account. I can't tell you how many clients we get that are operating their businesses from their personal accounts. Why? Because the accountant never explained this to them. And number five, they don't know how to run their own business. That's the truth. They don't train their staff. They don't standardize the bookkeeping process. They don't have a good client information system. That's it, folks. That's it in a nutshell. Now, this is us. This is Bedrock Business Builders. We're transparent. If you like what I said, if it resonates with you, feel free to book a chat with me. All you got to do is go to Time with Joe. Just tell me that you watched my video where I was ranting about the problems with the accounting industry. If you're somebody that doesn't agree with me, book a call with me. Let's discuss it. Let's debate. Maybe I'm wrong. Maybe I got the wrong impression, but I don't think so. I don't think so. Okay, subscribe to my YouTube channel. Okay, just go on YouTube and look us up. We're on Facebook. We're on LinkedIn. I'm here 3 times a week, Monday, Wednesdays, and Fridays, live. Thank you, folks. And thank all of you, LN, Joe C., Eileen, Grace, Deck, Catherine, Luz, JC, and my friend Marianne. Thank you all for watching, and I will see you again next time in 2 days. Thank you. God bless.